All right, Yash, thanks a lot for taking us through that complete roundup of what September has looked like for the general insurance companies. But with that, let's move on and also bring you some news on the macro front. The World Bank has cut India's GDP growth forecast for FY23 by 100 basis points. This is to 6.5% now, and they've also revised the FY24 growth target lower by around 10 basis points to 7%. Now, the bank has also said that exports and services in India have recovered stronger than the rest of the world average, and that India's ample foreign exchange reserves will serve as a buffer from external shocks. So that's what the World Bank has to say on India's growth picture. In fact, let's also listen to what World Bank Chief Economist for South Asia, Hans Timmer, had to say on the latest forecast.
India is still doing relatively well, although it was also downgraded 1 percentage point since June, with now the forecast of 6.5% GDP growth. Again, a slowdown as we see in the rest of the region. India has the same problem with the rising commodity prices, rising input prices, and also the tightening of the global financial markets and weaker demand abroad. As a result of that, we expect that the second half of this calendar year will be relatively weak also for India.
All right, more coming in from the global commentary. Well, IMF Chief Kristalina Georgieva warns of greater recession risks ahead of the fund gets set to trim its global growth forecast at its annual meeting coming up next week. So next week is going to be important. Note that as early as the month of July, the fund had cut its growth outlook for this year as well as the next year. Listen into the excerpts from the IMF chief's conversation with CNBC.
US still holding better, but momentum is slowing down. Why? Because interest rates are starting to compress demand and also to weigh on investments. And in this environment, inevitably the world economy is also slowing down. We are calculating that for 1/3 of the world economy, this year and next year, there would be 2 consecutive quarters of negative growth, and that the risks of recession have gone up.
All right, that is the word coming in from the IMF, that the risk of a recession has only gone up as momentum in growth globally continues to slow down. But that's all that we have time for on this edition of Business Lunch. The market is currently down around 70 points. So that's what we're seeing in terms of the Nifty. The Nifty Bank is where a lot of the pain is coming through, over 1% lower, 450 points gone on the Nifty Banks. So keep your eye out on the markets. We're going to wind up here, but Midcap Radar comes up next, and they're tracking all of the action.
Co-powered by AM